Welcome back. I'm Pratap here. Today is the 4th October 2024. In this video, we are going to evaluate the performance of high liquidity zones generated in the previous report. And also it is a very important video because I'm going to give you a overview about top-down analysis. So far, I haven't discussed about top-down analysis in our training course because it may take some more time to get into that lesson. Before that, a few more other strategies also we should complete. So that is the reason why today I found the best stock to explain or to make you understand the real concept behind top-down analysis. What kind of advantages we get by doing top-down analysis, you will get clarity in today's session. So IOC is a good example to make you understand the importance of the top-down analysis. Even before that, Tata Communication, we got two trades. One is stopped out and one is a successful trade. And the stopped out one is also having some concern about that particular zone. I will explain. So Tata Communication is a daily high liquidity zone. This is a rally base rally, a fresh zone. And this one is this daily zone is fine tuned with 75 minutes time frame. Forget about this zone, I will explain at the end. But before that, we have a drop base rally. This is the 75 minute zone, excellent 75 minute zone, drop base rally, and then follow through candle. And within this drop base rally, again we identified a 15 minute zone, a fine tuned 15 minute zone. So let's look into that. So here we have a rally, two base candles and a rally candle, rally base rally. And this fine tuned rally base rally, the 15 minute zone, is again fine tuned with 5 minutes time frame. So here you have a rally candle. This is not a base candle. Why rally? At the hidden body. The moment you add the hidden body, it is a rally candle. We have a base candle, and then again you have a rally candle. And after that again it picked up the orders from this zone. Not only that, and next time again it is a tested prices, penetrated more deep inside, almost very close, almost close, not very close, but close to the distal line of this zone. Because it is a tested zone, next time easily it will be violated. That's why we didn't have any plans to trade in this fine-tuned 5 minute zone, because it is not a fresh zone. So that's why this zone is. If some of you did not convince all these candles, you can also consider a rally candle, base, 2, 3, 4, 5, 6. That way also you can combine everything. But okay, but the real orders are picked up from this area. And also there is a rally base rally. See here, rally base rally. This is the 5 minute zone, is the horizon for this entire daily high liquidity zone. This is the entire daily high liquidity zone. Let me go to the daily time frame. You get clarity. We have a rally base rally. See, this entire base is formed by picking the orders from this 5 minutes zone. So the actual institutional order flow is within this area. And the institutional order flow is picked up from this 5 minute zone. That's why we already developed a concept in lesson 22. This is a new concept I developed. The lower time frame zone as an horizon to the higher time frame zone. So it is my invention during the software development. I got this idea and I observed several scenarios. The lower time frame as an horizon to the higher time frame zone is having a very strong institutional order flow at many situations. Many situations, majority of the situations, maybe 80% scenarios or even more, these zones gives a very good success rate, rally base rally. See, already see from this 5-minute zone, it just picked up the order. Not only you should not see, it picked up the order. After that, see the momentum also, how exactly the prices moved up. You got it? It picked up the orders and then prices were started moving up. So that is the reason why you have to understand this is a very, very important zone and a strong institutional order flow. And remember, this 5-minute zone is having this fine-tuned 5-minute zone is a horizon for this entire daily high liquidity zone. This is how you should understand the situation. So that is the reason why today if prices are entering into this area, you can plan a trade. Anyway, you can't plan a trade. This is a tested zone. This is a fine-tuned 5-minute zone which is tested. You can leave it. But below the rally base rally, you may ask a question. This is also tested. That test you should not consider. You have to understand it just picked up the orders and the horizon is started. I mean the move is started from this horizon. Because it is having a strong order flow, it may support second test. Sometimes it support even third test. So this is the area you have to plan a trade if prices comes. But what about this zone, this rally base rally? This is a normal 5-minute zone. Many times such kind of zones will be violated. But why we have drawn this zone? There is a reason for that. See, today market is started. Prices came very near to the zone. And then the institutional order flow is very strong. This is morning 9:30 candle. And this area does not let the prices go down. Again it pushed the market up. It pushed up to where? Up to 15 minutes target zone it pushed. Let me go to the 15 minutes time frame, you get the clarity. The prices came, it pushed the prices. See here you have a 15-minute zone is available here. We have a drop, 2, 3, 4 base candles and again a drop candle. That way maybe you can understand. And again this is a supply zone. Again it picked up the orders from here and again it pushed the prices down. So what is our impression next time when prices are entering here? Definitely this zone will be pushing up to the 15-minute supply zone target zone. But unfortunately today that does not happen. This zone is easily violated. That means this is a dynamic. See, this is a sorry, I forgot. Suddenly my mind is struck up. Yeah, this is an aggressive trade setup. This is an aggressive. We have a price action clue, rejection before the zone. So that is the reason why next time again prices retraces back to this zone. Maybe this zone will give a very good trade. This is how generally the aggressive trades work. But today it failed. We have to accept there is no other choice. So this is the way this 5-minute zone is stopped out. And how much loss we got? We got 752 rupees loss we got, which is a minus 0.8% ROI as per one futures margin cost. This is a negative ROI. So this is the stopped out trade. I am deleting this. After that prices reached into this fine-tuned zone. This is the fine-tuned 5-minute zone. And we predicted this zone will be violated because this is not a fresh zone, already tested. See, when prices came, some rejections it gave, maybe some new orders people might have placed, but that is not a great thing because there should be a good move. There is no move at all. Next candle again lower low, again lower low. See all these candles, lower low, lower low, lower low, low of these candles. That means supply is very strong. And finally this fine-tuned 5-minute zone and even fine-tuned 15-minute zone is also violated completely. So this is gone. This fine-tuned 15-minute zone is also gone. But what is this here? This is the 5-minute zone as an horizon to this entire high liquidity zone. Let me delete even the 75-minute zone. Even though it is not violated, 75-minute zone is valid to bring you clarity. See here. So this is the daily zone. This daily zone is having, at the distal line, it is having confluence with 5-minute zone. This daily zone is having confluence with the 5-minute zone at the distal line. That is the point you should remember. And this 5-minute zone is acting as a high liquidity zone. And moreover, at what time prices entered into this zone? At 2 o'clock 25 minutes. That means last 1 hour of the trading session. I clearly told you earlier, if anybody wants to take trades during last 1 hour, entering up to 15 minutes target zone may not be having the sufficient time. Today it reached during the last 5 minutes candle, the 15 minutes target it reached actually. But in our trade plan is only till the 5-minute zone. See here, you have a rally candle, or you can consider this as a leg-in. You have a base candle, and then you have a drop candle. Maybe some of you might have considered this is the leg-in candle, these two base candles you might have considered. That also possible. But I am not convinced because the length is much stronger compared to the other base candles here. That's why I have considered this. According to me, this is my target. But 1:3 RR is required, right? Without 1:3 RR, you can't plan a trade. Actually, where your entry is coming here. If you are taking a trade here, what is the RR you are getting? 1:1.8 RR you are getting. You have to reject this trade. That's why to minimize the risk, the adjustments we have done. What is that I did? I tried to reduce the risk. See, I was reducing the risk. By the time it reached here, I got 1:3 RR. Exactly. Okay, by adjusting like this, there is a disadvantage. What is the disadvantage? There are higher chances you might miss the trade. But without RR, you can't take the trade. Without RR, anyway, you can't take the trade. But there are some chances you may get the trade, right? Instead of completely rejecting the trade, having some chances for the trade execution. See, today prices entered into this area. So that means your entry is triggered here. After that, prices went some more further inside. After that, the strong order flow in this area again pushed the market until this 15 minutes target. And your entire trade is completed in just 7 minutes. That too during the last half an hour. And the whole day market was going down. In between many zones it was violated. Okay, only one zone only we planned as an aggressive trade. Even that one is also violated. But finally this particular area, the lesson 22, what the concept you learned, lower time frame zone as an horizon to the higher time frame zone. And that concept today made you get a successful trade. In just 2 minutes it reached the 5 minutes target. After that prices came, because maybe the order flow here also, maybe sufficient order flow is there, again push it down. But still, because the demand in this area is very strong, again further pushed, and finally this 5 minutes target is completed. And the last candle, the last 5 minutes candle before closing the market, it reached even 15 minutes level. See here, you have a 15-minute zone here, you have a drop, you have two base candles. This is a ERC, it's a failed ERC candle. Some of you might be having a concern to accept this is a leg out. So it's not clear. Even for me also it is not clear. Because the follow-through candles I considered. maybe not, this is not an entry zone, at least this is a target zone to consider. But still, I can't 100% give importance to this, because this might be violated and further go. In this area, let me mark, in this area, if there is any fine-tuned 5-minute zone, then I want to give importance to this as a 15 minutes target. So go to the 5 minutes time frame. Is there any 5-minute zone here? Yes. You have a drop, 3 base candles and a drop candle. You can fine tune like this. Already previously also see prices went here and again see how strongly it came up to here. And now again, exactly till this area, prices reached. See, end of the day it reached up to here. But I calculated the profit only from here to till 5-minute zone only. Till 15-minute zone, you might have got even more profit. But till 5-minute zone, because last 1 hour trade, only 5 minutes target zone. Till the 5 minutes target zone, Tata Consumer has given 2,120 rupees profit, which is a 2.3% ROI. Maybe you would have got more profit if you would have considered up to here. But generally, such kind of trades will be very risky during the last 1 hour of the trading. You got in 7 minutes, you got a profit of 2,120 rupees. You should be very happy because you got 2.3% ROI in just 7 minutes in trading. That's an excellent trade. But still, what I am trying to say, the power of this lower time frame zone as an horizon to the higher time frame, it pushed finally up to even 15-minute zone. So this is what you should understand. Even you can fine tune like this. This is the type 2, exact type 2. So reach it there. So drop base, 3 base candles and drop. Hope you understand the power of a lower time frame zone as an horizon to the higher time frame. Maybe otherwise you would have got another 2,000 rupees profit till here. Maybe you would have got 4,000 rupees profit. You might have got 4.6% ROI you would have got if you consider till 15-minute zone. Because this is the last 1 hour trading, obviously our ROI is reduced. But high liquidity zone has given opportunity. Okay, anyway, the profit margin we calculated I calculated up to here because this is last 1 hour trading. Okay, the next one is IOC, because IOC is having a lot of importance and the zone is also stopped out. But still, some important lesson you will be learning from IOC. Everybody, you will be learning today in IOC session. So I am moving to the IOC. IOC is the 75 minutes high liquidity zone. This is the 75 minutes high liquidity zone identified by our software. This is the drop base rally. This drop base rally is the 75 minute zone. 75 minutes high liquidity zone. And this 75 minutes high liquidity zone, all of you please listen, this 75 minutes high liquidity zone is not only a high liquidity zone trade, it is also a bullish trade setup for weekly income trade. In weekly income trade, entry time frame is 75 minutes. Do you remember previously we have seen Tata TCS? In TCS also few days back, a few minutes, maybe a week back, let me see, when TCS trade, here, 19th September. Exactly, the TCS is also, but here TCS is a daily high liquidity zone. So TCS was a monthly income trade. But this is a weekly income trade. And not only this zone is having confluence with ITF zone. What is ITF? Daily. In weekly income trade, ITF is daily. Daily trend is uptrend. And not only it is having confluence with ITF zone, it is also having confluence with HTF zone. What is HTF? Weekly. ITF is daily, HTF is weekly in weekly income trade. Because with HTF name only, the names as given. Monthly income trade, weekly income trade, daily income trade, hourly income trade. Of course, instead of hour, we are using 75 minutes in our Indian stock market. So even it is having HTF confluence, that means this 75-minute zone is part of the daily zone, and both together, 75 minutes and daily together, again they are part of the weekly zone. That is what zone confluence, LTF, ITF, HTF, zone confluence. Not only that, there is another important point is that weekly zone, HTF zone, trend is also uptrend. Even not only that, the weekly zone is having weekly EMA confluence. See how many parameters are in favor of this particular stock. And moreover, it is having two fine-tuned zones. This 75-minute zone is having two fine-tuned 5-minute zone. See, this is the first fine-tuned 5-minute zone. This is the second fine-tuned 5-minute zone. And both zones are part of this 15-minute zone. Let me go to the 15 minutes time frame. See here, you have a rally, you have 1, 2, 3, 4 base candles, and then again a rally candle, rally, base, rally. This is the 15-minute zone. What kind of 15-minute zone? It is a fine-tuned 15-minute zone inside the 75-minute zone. This 75 is inside the daily zone. The daily zone is inside the weekly zone. I haven't drawn those zones. I will draw those zones once I explain top-down analysis. And again this 15-minute zone is having two fine-tuned 5-minute zones. See here. Here you have a drop, 1, 2, 3 base candles, rally. And again rally, base, rally. Because this overlap happened at the type 1 proximal line. That is the high of the zone, this overlap took place. Because it is a bullish trade setup, many times the first fine-tuned zone itself will push the prices up. That possibility is there. If this is violated, second one probably much stronger way the trades will be executed. And it might give us a very good trade opportunity. But institutions are very clever sometimes. They know how to trap us. Exactly they did today. Completely both the zones are wiped out. That means they are completely violated in this candle, 5 minutes candle. Morning 9:15, 5 minutes candle. Have we got loss in these two zones? No, we didn't get loss. The reason is both these zones are stopped out in the first minute of 9:15. Or I can say 1 minute to 9:15 candle itself it happened. I am changing the time frame to 1 minute. See in the 1 minute candle. Mostly we don't take trade in 1 minute because with gap down many of these zones will be violated. There are higher chances. If that is the case, we get a lot of losses. That's why once the market starts, many times we plan our trades. But if anybody placed pre-market orders, definitely both these zones might have been violated. That's why many times we say avoid trade on morning 9:15 candle. We get clarity. If there is any gap out, gap down, we won't get huge losses. After that we plan. See morning 9:15 minutes candle, it opened, sharply came down and again moved up and again further went down. All actions happened within this. Because volatility, 915 candle, volatility is very huge, unexpected things we see. Sometimes freak trades also takes place during morning 915 candle. Freak trades generally happen because of heavy order flow, morning 915, software can't handle. So at the time some of the wrong trades will be executed. Just one or two trades at lower price levels. Because of that one or two trades, these huge candles will be formed. That's why we call them as freak trades. That's why to avoid all these practical issues, many people they don't trade in the morning 915 candle. 916 onwards, mostly market will stabilize. So probably you get clarity. By the time this entire order flow is gone, this indicates there is no order flow at all here. Why there is no order flow? Why institutions took the order flow? Is there any reason? Yes. That's why I told you earlier, institutions are very clever. But how can we understand the cleverness of institutions? What if we would have got profits today? Anyway, this is a HLQ zone trade. I'm talking about bullish and bearish trade setups point of view also I'm talking. Because this is not only HLQ zone trade, it is also a bullish trade setup for weekly income trade. And this zone is completely violated. That means trend is changed. No, trend is depending on the ITF time frame. This 75-minute zone is a LTF zone. Trend is depending on ITF. In weekly income trade, the trend, ITF trend is a daily time frame. If the daily zone is violated, probably the trend will be changed to sideways. At the time your TCO, trend change origin related setups will be enabled. Okay, first of all, what is a top-down analysis? Because I have to get into that. Overview I will give. I won't give you very detailed that we discuss in the training lessons. But at least you get a fair idea. And also you understand the power of top-down analysis. And also you will understand the importance of top-down analysis also. You will understand after seeing the magic that happened in IOC stock in today. Well, magic has happened. It is violated. Where is the magic, you may say? You will see very soon. Okay, as I told you, top-down analysis. So top-down analysis is a kind of analysis we do from higher time frames to till the lower time frames, 5-minute zones. Some people may do 1-minute analysis, but mostly 1-minute analysis we won't include in the top-down analysis unless you are a scalper. So we limit to 5 minutes. Generally, top-down analysis will start from monthly or weekly, either monthly or weekly. But the standard implementation is from monthly. First, we look into the monthly. We analyze the monthly. What kind of analysis we do? We do EMA confluence is there or not? Price overextension is there or not? What kind of trend monthly zone is having? All these things we see. But unfortunately, IOC monthly zone is not having any clarity. That's why we have to start from weekly. But anyway, this is the monthly time frame. Just I want to show you there is no clarity here. Monthly zones are not very clear. You may say, can we say rally, base, rally? No. This candle I am having a lot of concern. This is looking like a ERC candle. Failed ERC candle. This is a rally candle. In between, no base candles. So that is the reason why you may say somewhere here rally 1, 2, 3, 4, 5 base candles rally. This is far away from the current levels. So this is the reason why just ignoring this monthly. Let's start with weekly. This is let me delete this. This is the target, right? Why I have drawn this? Anyway, after that, let's delete the unwanted things. Next, I am going to the weekly, changing the time frame to weekly. See, market is at all-time high. It's moving near the all-time high. And by the time it reached the all-time high, all the supply zones will be violated and it will reach that. Even see, this drop-based drop is also violated here. So finally, by the time it reaches, the trend is uptrend. So currently the weekly trend is uptrend. That way we can assume until any new demand zone is violated. There is immediately one demand zone is available that we will see in daily time frame. But weekly, where is the weekly demand zone? If weekly demand zone is violated, weekly trend will be changed to sideways. Here you have a weekly zone rally, 2 base candles and a rally candle. Let me draw. Okay, weekly color, I will give monthly color, even much lighter color, but it is a weekly zone. I am just giving only the color, a light color. So this is a weekly demand zone, rally, base, rally. Is our 75-minute zone. I am going to the 75-minute zone. Earlier we have drawn this, so this is unnecessarily time being, I am deleting this. Now see here, this is a drop base rally, 75-minute zone. Is it part of the weekly zone? Yes. So this zone is having a zone confluence with HTF time frame. This is LTF, 75-minute zone. And moreover, the 75-minute zone is a high liquidity zone. And this high liquidity zone is violated today. But in the morning 9:15 minutes candle it is violated. Mostly we would not have been executed any of our trades. Otherwise 2 zones might have been violated today. Otherwise 9:15 candle saved your trades. Okay, so this 75-minute zone is part of the weekly. So let's go back to the weekly time frame. What is the advantage we get with this top-down analysis? One important advantage is you will come to know about different trends, price direction related concepts you learned in phase 2 training and phase 1 training programs. You will identify, and more importantly, income trades we can identify. Because a stock might be currently supporting a weekly income trade, further go down, you may see again it is also might be supporting a daily income trade or hourly income trade. That way you will identify multiple trade opportunities by doing top-down analysis. Top-down analysis is the best analysis for finding the different income trades. A stock may support multiple income trades at the same time. Today we are having the scanner. With the help of NeoStock scanner, we are able to identify bullish and bearish trade setups easily. But without the scanner, how do you identify? By doing top-down analysis. You are a trader. You will make use of any income trade. You will make use. Whichever the income trade a stock is supporting, that you will identify only by doing top-down analysis. See, the trend is, now you identified weekly trend is uptrend. So there is a chance that the weekly trend you may identify, and also this zone is also having weekly EMA confluence. Let me show you. So this is the weekly time frame. This is the weekly EMA confluence. See, the weekly zone is having weekly EMA confluence. Generally, when EMA confluence is there, people can use that zone as a HTF zone, and they prepare their trade setups. Because it is having weekly EMA confluence, people will check whether this is having weekly income trade setup it is supporting or not. They keep this as a HTF zone. Then they look into ITF zone. If ITF trend is also uptrend, then they plan for bullish trade setup by looking for a 75-minute zone. This is the way people do different income trade related setups. They plan based on even EMA confluence. Next time when I explain the advanced strategies, EMA confluence strategies, when I explain, I will tell you all these concepts so that you will understand. All these strategies you will be learning in the coming days. But before that you need to gain some experience. That's why slowly I am teaching the advanced strategies concepts one by one. The last concept you learned TCO. Probably next 1 month you will be practicing that concept, or next 15 days or 1 month. until I teach the next concept. That way you get perfection on each of the strategies you are learning. Because you can't learn all the strategies over within just 1 day or 2 days time period. You won't understand unless we practice a lot. Okay, the weekly zone is having weekly EMA confluence. So now we got a clarity. The weekly trend is uptrend and it is having weekly EMA confluence. Now let us look into the daily zone. Is there any daily zone inside the weekly zone? Let's identify. So I'm changing the time frame to daily time frame. Okay, here a drop, a base, rally is there with hidden body, but this is already pierced. You can't use this zone. But what about here? Is there any zone you are seeing? Maybe you might be seeing rally, 3 base candles and rally. Do you agree? But actually our software consider this also a base candle. Software is much accurate. We all should agree that. The reason is, as a human, we see the visual representation of these candles. Based on the visual representation, we identify mostly 90% scenarios that works. But 10% scenarios, visual representation may fail because the candle sizes will be varying when you zoom in or when you zoom out. See here, now how this candle looks like. Is it looking like a leg candle? Is it looking like a base candle? Now it is looking like this is the drop candle. You have base candle 1, base candle 2, base candle 3, base candle 4, base candle 5. Now it is a rally candle. See? Now you see it is looking like a leg candle. So it is a rally, 3 base candles, rally. See how your representation is changing. That's why sometimes our eyes will cheat us because of these graphical representations. This is the problem with the charts many times I see. That's why always, even when I analyze, I zoom in, I zoom out, different combinations, I look into the candles, and then I take my decisions. Anyway, software is with me. That is one advantage I am having at present. Let me show you how software identified this zone. We have a NeoStock supply demand zone chain is there, right? So in that IOC, I am generating IOC supply demand zone and daily time frame. Time frame is daily. I am generating the chain. Maybe it will take few seconds, maybe 3, 4 or 5 seconds, then it will generate. Okay. See here, the immediately available daily demand zone. When is the leg-in? 19,924. After that, how many base candles? 5 base candles. And then 29 September, we have the leg out. 19th September, we have the leg-in. See here, you have a rally, 3 base candles and a rally. This is how, as a human, we are saying. But what software said? No. You have to consider. Even this software did not consider this as a drop candle. Software considered this candle as a rally candle. You may say, how can we say? That's why I explained in Q&A lesson 2. You can find Q&A playlist under the playlist. You have playlist here, right? You have a Q&A playlist. If you open this view full playlist, you will be seeing lesson 2. Q&A 2, how to use a failed ERC candle as a leg out. At the time I explained about a concept called dynamic view. This dynamic view you will understand once your experience grows. There I explained the candle view. This is while candle is finished, this is the view. But at some point of time, you see, the candle was rallying. Finally, it closed. So it considered that part also it will consider, and a lot of calculation software will do the dynamic view, because I implemented dynamic view algorithm already in my software. Remember, this is an advanced software, not the basic level. It supports the dynamic views also. Based on that, it considers. So how it consider this RBR, rally base rally, but as per the concepts you learned, it looks like a drop base rally, because this is looking like a failed ERC candle because of these wicks, this week and these wicks. A failed ERC candle it is looking like. In failed ERC candles, software will identify dynamic views for identifying whether it is a rally candle or drop candle. So okay, anyway, if it is rally based candle, you don't draw zone up to here, you draw zone up to the lowest of the base candles. How many base candles? 5. But this is not a leg candle, right? Base candle. See, a leg candle now all of a sudden changed as a base candle. Now this is looking like a small candle. That's why these are the visual representation issues. And finally, this is our, let me change the color. This is a daily zone. This is the daily demand zone. See, this daily demand zone is where it is. This is inside the weekly demand zone. And inside this daily demand zone, we have this 75-minute zone. This is what zone confluence. 75 minutes is a lower time frame, daily is a intermediate time frame, and a weekly is a higher time frame. Lower time frame, intermediate time frame, and higher time frame zone confluence. Generally I call it as LTF, ITF, HTF zone confluence. Every day in the stock, in our NeoStock reports, I am displaying the stocks having these combinations. In yesterday's premium video, when I generated in bullish trade setup, our bullish trade setup, this zone is identified as, this zone is having currently supporting bullish trade setup for weekly income trade. This 75 minutes LTF zone is having confluence with daily zone, and the daily zone is having confluence with the weekly zone, and also weekly zone is having weekly EMA confluence. Zone confluence, weekly EMA confluence, both are there for weekly zone. That's why we called this as a high probability setup. And the high probability setup is violated today. Is it not looking funny? Yes. If you don't learn top-down analysis, this concept looks like a funny concept. The moment you learn top-down analysis concept, you don't feel like it is a funny concept. You feel like it is a money-earning concept. Money-earning concept. Okay, now we are in the daily time frame. We have a daily zone. We have a rally, base rally. Actually, it looks like a drop base rally, but dynamic view point of view, this is a rally, base rally. Dynamic view. Because it is a dynamic views, I am applying to only failed ERC candle. Software identified this candle as a failed ERC candle, not having sufficient body to consider the rally candle or drop candle. It can't be considered as a drop candle because not having sufficient body. The wicks are dominating, upper wick and lower wick, both will be considered. In the entire range of body and wicks you are comparing, wicks are dominating the body. So that's why in the failed ERC candle, importance is given to the dynamic view. So dynamic view concept tells this is not a drop candle, tells it is a rally candle. Based on the wick, sufficient body is there in the dynamic view, so it is a rally that way considered. Rest everything will be, this body is changed to a wick. Okay, finally, all these candles are part of the base, and this 75-minute zone is violated today, it looks like, but our game is not completed. First, let me tell you what is the trend of this particular stock, daily zone. The trend of the daily zone is uptrend. At present, it is uptrend. When daily trend will be changed to sideways? If this daily zone is violated, but is daily zone is violated? No, it is not violated. That is the advantage of doing this top-down analysis. Only 75 minutes entry time frame zone is violated. Your LTF trend will be changed, but we don't consider LTF trend at all. We consider only ITF trend, intermediate time frame change. And in bullish trade setup, weekly trend also we consider for additional support. Either it can be sideways or it can be uptrend. Either one is allowed in bullish trade setup. Of course, price directions also we change, but time being I am not focusing on the price directions because they are all already in our favor. I don't want to complicate the initial concept that I am explaining about top-down analysis. Let me limit to a minimum level. That's why I told this is an overview. First, the advantages you are understanding by doing top-down analysis. We are getting clarity what kind of trends at different time frames, HTF time frame, ITF time frame. One by one, we are analyzing from top to bottom. Top is say either monthly or weekly. So we started with weekly. Monthly zone is not clear, so we started with weekly. And then we started with daily. Now daily is the ITF time frame. And also we clearly confirmed the ITF trend is uptrend because this drop-based drop is violated, and finally it moved to the uptrend. And this daily zone is not yet violated. If it is violated today, then daily trend would have been changed to sideways, and no more weekly income trade bullish trade setup is valid. But because this daily zone is not violated, still it is a valid zone. But you may say, my 75-minute zone is violated. Yes, it is violated. But what is the advantage I am getting? Now you will understand the moment we change it to the 75 minutes time frame. Everybody concentrate here carefully. Now we are learning the big concept that will surprise you. Now let us inspect this daily zone in detail by changing the time frame to 75 minutes time frame. Okay, it looks like our 75 minute zone is violated, but go to the 75 minutes time frame. Here you have one more 75 minute zone. Rally, 1, 2, 3, 4 base candles, and again a rally and follow through candles. See here. Now I am increasing the color thickness. This is the 75 minute zone. We have a rally, 1, 2, 3, 4 base candles, and a rally candle, and then a follow through candle. And what happened? Prices reached to the 75 minute zone. By violating this 75 minute zone, your daily trend is not changed. Daily trend is still uptrend. That means this rally based rally is also supporting, I repeat, this rally based rally is also supporting bullish trade setup. If this bullish trade setup is violated, still you have another trade opportunity in this rally based rally for your bullish trade setup. Okay, high liquidity trade is gone. Forget about that. This high liquidity trade is supporting bullish trade setup. I am focusing on that bullish trade setup. The moment this zone is violated, many people think the bullish trade setup is gone. But actually it's not. The reason is inside this daily zone, we have one more order flow is there. That's why I told you earlier, institutions are very clever to make them get convenience. They are using different setups. Probably from here they have completely withdrawn their orders. Even though there is a 5 minutes order flow is there, they might have completely took off their order flow from this zone, and all the orders they might have kept in this particular zone. But is this zone is having a fine-tuned 5 minutes time frame? Yes, it is there. Now go to the 15 minutes time frame. See, you can consider drop, 2 base candles and a rally candle. That way you can do. Or rally base rally also you can consider. Either way. Sometimes you can compromise and draw the zone. Actually, I have drawn zone like this. Rally, base, rally. This is a 15 minutes demand zone. You can also draw like this. I mean, you have to extend up to here. This is also valid. Nothing wrong. But I have drawn like this because the order flow is within this area. Now I am going to 5 minutes time frame. So here I have drop, base candle, medium candle is also part of the base, and a rally, follow through candles. And this is the 5 minutes demand zone. This is the real institutional order flow. See, today exactly it touched the real institutional order flow, and see the sharp rejection from here. Now let me go to the 75 minutes time frame. So this is the 75 minute zone where you planned your trade. Those who wants to carry short term income trade point of view, probably you may take your trade maybe in the type 2 proximal entries of this 75 minute zone. A little above you can take the trade. Or if you are an intraday trader, you want to exit, even though it is a bullish trade setup, but only you want to exit in the income. But you have to plan your trade only in the 5 minutes time frame because of the risk management point of view. But those who are carrying the positions to the next days until it reaches, because for them the target zone is 75 minute zone. But as an intraday trader, your target is only 15 minute zone. If not 15, 5 minute zone. So those people definitely they plan their trades. Today it reached exactly up to the order flow, and the real order flow pushed the market up. How long it will push? At least immediately up to its 15 minute zone. Actually 75 minute zone also, see, drop to, actually we have a 75 minute zone is here. This is 75 minutes supply zone. But we want 15 minutes target. 15 minutes is also the same. Only risk will increase. You have a drop, 4 base candles, and a drop candle. Because there is a pro gap, generally what you do, at the gap area, the open of this candle, sorry, let me delete this. The horizontal line I am drawing, blue color line. This could be our target because there is a pro gap. It may not be allowing prices to reach up to this 75 minutes target. See, today that is what happened. Before reaching this 75 minutes target or fine tuned 15 minutes target, a little before again prices are started moving down because here pro gap order flow is there. So that's why up to this blue color line. Generally what people will think, by seeing the first 75 minute zone, you will be thinking your bullish trade setup, because this zone, your 75 minute zone is violated. See here, in this candle, the entire 75 minute zone is violated. This is the 15 minutes candle. And you will be thinking, okay, my bullish trade setup is gone. But if you would have done top-down analysis, you might have identified in the same daily zone there is one more order flow. If this order flow is also violated, then daily trend will be changed to sideways and the bullish trade setup is no more valid. Because the daily zone is not violated, still your bullish trade setup is valid. Because the weekly zone is having weekly EMA confluence. The weekly EMA confluence gives high probability setup, either the first one or the second one, or maybe both also it can give. If any reason, if the first setup, bullish trade setup is violated, immediately the second bullish trade setup is enabled. How you are able to identify two bullish trade setups? Because you did top-down analysis. If you would not have done top-down analysis, you will stop your analysis immediately. The zone is violated. The 75-minute zone is violated. Remember, 75-minute zone is not an ITF zone. 75-minute zone is only LTF zone, lower time frame zone. Even though the 75-minute zone is having zone confluence with daily zone, that is ITF confluence, it doesn't mean 75-minute zone violation is equivalent to daily zone violation. If you think like that, it is a wrong understanding. 75-minute zone violation is not daily zone violation when zone confluence is there. Because your ITF zone might be having one more order flow. You have seen in this example today. If all the order flows are violated, mostly the ITF zone will violate easily. And moreover, it is having confluence near the digital line. Mostly if this 75-minute zone is violated, your daily zone also will be violated. But that didn't happen today. Here we have a strong institutional order flow. Institutions probably they trapped us. They removed all these order flows from this zone. And cleverly they might have moved the order flow in the bottom one. And finally prices reached to this bottom one. Let me move on to the 5 minutes time frame. At what time it entered into this zone? Morning 9:30 candle they entered into this zone. See the fine-tuned 5-minute zone. How it pushed the prices. After that how it went. And finally reached the target. Okay, I agree. High liquidity zone is violated because in the 9:15 candle the orders are removed. So we are not really worrying about that because we might not have placed our orders. But definitely if you would have identified this zone, your order flow might be within this area. It might have been executed even though your zone is violated. The first one is violated. Still you might have captured the profit from here. Of course, this is not a HLQ trade. But this is a bullish trade setup trade. Bullish trade setup for weekly income trade. I repeat, bullish trade setup for weekly income trade. Definitely I agree it is not a HLQ trade. HLQ trade is gone the moment this 75 minutes high liquidity zone is violated. But generally if you want to get profits, what you have to do? You have to combine all these concepts. Now we are learning all these concepts in bits and pieces. The moment you learn top-down analysis, you combine all the concepts you learned so far. That's why top-down analysis I moved to the last topic. Because you combine all the concepts. By doing top-down analysis, any concept, any trade opportunity, you will be in a position to grab that opportunity. Suppose let us assume you people are having idea about top-down analysis. Today, before taking this HLQ trade, you might have completed the top-down analysis. You might have identified the second order flow, the bullish trade setup order flow. The moment this is violated, anyway, luckily it is a lucky trade. Because morning 9:15 candle, 9:15 1 minute candle itself, the order flow is violated. So we didn't get any stopped out trades. After that, you might have done this analysis also. You might have identified this bullish trade setup. In the fine-tuned 5 minutes intraday traders, in the fine-tuned 5 minutes trade, you might have captured the trade and you might have exited in the blue color line. What I have drawn is the target. Because there is a pro gap is there. The gap where it is started with the open of this candle. I mean, the gap is closed here, strictly speaking. And now that means that now the gap is enabled only between this supply zone and the blue color line. Below gap is already consumed. That is what I mean to say. At least this is guaranteed because some people also draw like this, the higher wick. Because opened and prices moved, consumed the order flow. That's why they keep the target. But sometimes what happens, while prices are moved, right, at the time institutions might have added a new orders in this area. That's why it is always risky. At least this open of this candle we can keep. So what could be our profit now? The blue color line it reached here. At what candle it reached? Morning 11 o'clock 10 minutes. At what candle you took the entry? 9:30. So almost 1.5 hours you completed the trade, or 1 hour 40 minutes. This is 9:30. This is 11:10. So 1 hour 40 minutes your trade is completed. How much profit you would have got? Of course, because you didn't learn this concept, you won't be getting these profits. In case, if you are aware of these concepts and if you took this trade here, how much profit you would have got in 1.5 hours? Let us calculate. So what is the value here? 169.99 paisa. So let us say round value 170 rupees. So 170 minus, entry is in this zone. What is the entry? 165.86. -1 I will give because there I rounded the value. Let me remove that. So accurate value we get. Sorry. 4 point, not -1, it should be -0.1. So it should be 4.13. 4.13 is our profit. Instead of 14, instead of 4.14, 4.13 is our profit. Okay, what is the lot size of IOC? Let's open zero the margin calculator. IOC October future. This is the lot size, may not be the same, but approximate value. Let me find before that. What is the lot size? 4875. So into 4875, you got 20,133 rupees profit. Today is a bearish day. In a bearish day, you would have got a bullish trade, that is long trade, and you would have captured 20,133 rupees profit in IOC. Why you are not able to do? Because we are yet to learn top-down analysis concepts. If you would have learned top-down analysis, today successfully you would have taken this bullish trade setup stock. Even though the first order flow is violated, still you would have taken the second order flow. The second order flow you can identify only by doing top-down analysis, because software gives you the nearest, the immediately available order flows. With the help of NeoStock software results, you have to do top-down analysis. That's why I'm telling recommendations don't work. Only your analysis only works. That is the reason why I'm telling you, don't go for recommendations. Learn the subject. Once you learn the subject, you get complete clarity on the concepts. Of course, you are in the middle of learning all your concepts. Your course is not yet completed. Maybe 70% of the concepts you learned so far. Another 30% of the concepts you will be learning in the coming weeks. And that too, the top most advanced concepts you are learning now. Important strategies you are learning. Some of the concepts not available outside anywhere also you learn in this course. Already you have seen a lower time frame zone as an horizon to the higher time frame zone. Is completely a new concept. I developed that concept. And many times you have seen that concepts has given good trades. Even Tata Consumer also you got that trade. Earlier zones are violated, but lower time frame zone as an horizon to the higher time frame zone did the magic. That too in a bearish day, you got bullish trade opportunity worked out. The same is the case with even IOC also. Always looks like your bullish trade setup is gone. Actually, your bullish trade setup is not gone. Only one order flow in the bullish trade setup is gone, but another order flow has given you very good profit. It is around 20,000 rupees profit you got. What could be the ROI? In 1 hour 40 minutes, how much ROI you would have got? So where is the price? Because whatever we are seeing is, this is the margin cost at this level. But we have to calculate the margin cost at this level. Definitely, this margin cost value is less than the current value. So approximately I will reduce some value. This is, what is the margin cost here? 1,74,772.Maybe at this point of time, the value could have been 1,77,000 or maybe 1,72,200 or something like that. I mean 1,74,200 or 300. So I am reducing around 500 rupees from this, because when prices are moving from here to here, definitely a minimum of 500 rupees value might have been increased. It could be even more, but at least I am deducting only 500 approximate value. So it could have been 200. It could have been 1,74,200. So divided by 1,74,000. 74,200 could have been the cost of one future at this level. We got 11.5% ROI. This trade would have given you 11.5%. 11% return on your investment. That too in a bearish day. Who might have given you this opportunity? If you would have done top-down analysis, you would have got this opportunity. Top-down analysis, generally we start with monthly time frame. If monthly zones are clear, mostly weekly zones, some clarity definitely it will be there. And from weekly until 5 minutes, we did it, weekly until 5 minutes. We fine-tuned the zone up to 5 minutes level. But we ourselves limited to only WAT trade opportunity, weekly income trade. Maybe you can hold the position, you would have closed the position, that is up to you. Because see here, the 75 minutes zone is also very near to this. Definitely in the pro gap area, closing the position is a wise advice. You should not be greedy for this small portion. Because we don't know pro gap, it might have further pushed the prices down. Who knows, maybe tomorrow prices may be further coming down on this fine-tuned area might have been violated because it is already tested. It might have consumed a lot of order flow in this area. That possibility is also there. That's why you should make clever moves when you are while you are trading. When you capture more than 80% of your target, better exit. Don't be greedy for the remaining 20% target. Or if you are in the cash trade segment, at least close 70% of your positions. Still, if you want to capture the remaining, hold the remaining 30%. If anything wrong happens, that 30% level only profits will reduce, or maybe sometimes your stop loss might be exited. Still, you would have captured another 70% move or 80% move. This is the way you have to plan while booking the profits. A lot of strategies a lot of thoughts should be executed in our mind. So it came very close to your target 75. This 75 is your entry, this 75 is your target. Prices reached almost very near, but why we want to exit? Because of this pro gap. That's why I have drawn this blue color line. Hope you understand. I didn't really get into all the details of a top-down analysis. I just gave you an overview. How today the top-down analysis might have identified the second order flow in this daily zone. See, this entire thing is weekly zone. In the weekly zone, you have a daily zone. This entire thing is in the daily zone. In this daily zone, you have two order flows. The first lower time frame order flow, the second lower time frame order flow. And your trend will be changed if both these order flows are violated. And currently your software has listed the first order flow. By taking that software outputs, what software has told you yesterday, this zone is having confluence with ITF time frame. Immediately the point that should come to your mind is probably ITF zone might be having a second order flow. What should I do? That is the question you should put in your mind. Then immediately you should start doing your top-down analysis from monthly time frame. If monthly zone is not there in this IOC, monthly zone is not there. That's why first what I did, I went to the weekly time frame, I have drawn the weekly zone. Rally, base, rally, and I have verified the trend. Trend is uptrend, and also I verified the weekly zone is having weekly EMA confluence. If it is weekly EMA confluence is there, if it is having multiple order flows, any one of those order flows, guarantee there could be maximum guarantee will be there for the execution, successful execution. So weekly EMA confluence we have identified, and then what you do, you go to the daily time frame. In the daily time frame, drawn the daily zone, and we identified two order flows here. See, now all the candles looks like a base candles. Base candle, base candle, base candle, base candle, and base candle. And this is the leg in and this is the leg out. You have complete clarity now. This is also one point you should observe very carefully. That's why I told you already earlier. Many times when I am doing analysis, I zoom in, zoom out, and observe the candles. The one additional advantage I am having is software is with me. That is a major advantage for me. Any doubt is there, immediately I will check with my software. Okay, immediately what I did, I went to the 75 minutes time frame. There I identified drop base rally. This is already identified by our software, and also it is a high liquidity zone. High liquidity zone trade is failed. We have to accept that. But another bullish trade setup is there. And that bullish trade setup is successfully executed today and gave you extraordinary profit today with 11.5% ROI. Hope at least some clarity or the importance of top-down analysis. I am not telling you got complete clarity on top-down analysis, but at least one importance of the top-down analysis you might have understood in today's session. That is what I am believing. Okay, apart from that, remaining two, quickly we can close. What is the other one? Manapuram, we didn't get a trade. This is a daily high liquidity zone. We have a fine-tuned 5-minute zone here. I think this is also tested one. Let me explain quickly. It is having a 75-minute zone. Rally, 3 base candles and a rally with again a pro gap. I mean some more hidden body. This drop 1, 2, 3, 4, 5 rally I am not considering because it picked up the orders from this zone and moved. And moreover, if you drop, it is a LOTL concept. I am given importance to the origin where the actual order flow is there. There I have given the importance. So that's why this is the area I am focusing. And this one again I fine-tuned with 15 minutes time frame. So in the 15 minutes time frame, identified a rally base rally with pro gap and again another hidden body also you can add. Already it is a big candle. And this is the area again we need to fine tune with 5 minutes time frame. So here we have the 5 minutes so fine tuned zone is available. So I have a drop, base, rally and then follow through candles. And last time prices entered into this and picked up the orders. So because it is a tested zone, not planning any trades from this zone. Unless it is a high liquidity, we can't plan a trade. So that's why we didn't plan any trade in this stock, but prices also did not enter into the zone. See, today daily candle did not enter. Even the market is bearish, still prices did not enter into the zone. That means something is preventing here to enter into this zone. And last one is Canara Bank finance, home finance. This is a 75 minutes supply zone. We have a drop candle. This is not a rally candle. You have to see dynamic view. Failed ERC, you should consider this as a drop candle. And 1, 2, 3, 4 base candles, and again a drop candle with hidden body. To be honest, it is a hidden zone. And this zone will be violated because I didn't fine tune, I didn't find proper 15-minute zone here. See, all these, lot of consolidation here, no proper leg outs here. All these are all small candles. You may ask a question, why can't we drop 4 base candles drop? I am not convinced that this is a drop candle, this is a big candle. Because of this gap, you can't see, let me close the gap, you get clarity. Then you understand how big this candle. So I'm feeling like it's a ERC candle, failed ERC candle. And this is a drop candle, in between no base candle. That's why I didn't convince. Even if you go to 5 minutes, actually even if you compromise and drop, go to the 5 minutes, you get clarity. 5 minute situation, 5 minute zone is even much worst. See here, definitely you can't. This is a rally candle with a hidden body. This is a drop candle. In between there are no base candles. It looks like a drop base rally here. And next candle, this entire zone is violated, invalid zone. So that's why I inspected the 5 minutes also. So finally I concluded this is not having a proper, there are higher chances this zone will be violated. Unless next time prices enter, institutions create a new very good fine-tuned 15-minute zone and push the prices. In the next retracement you can plan the trade, but otherwise the zone might be violated. So this is about the high liquidity zones generated from our previous report. Hope this information will be useful to you. Hope you are also having a good understanding about the top-down analysis. Some overview you got, at least some importance you might have realized after seeing IOC bullish trade setup. Always remember, bullish trade setup will change only ITF zone is violated. If ITF zone is having another order flow, there are higher chances the second order flow will be executed if first order flow violates. Because first order flow might have consumed majority of the supply. The second order flow, probably it consumes the remaining supply and pushes the market. That is what happened in IOC today. So this is about today's session. Let's all meet again in our next video. Thank you.